This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Monday morning. Welcome to another week. As we enter the week, I look overseas to see what's going on. As of now, kind of quiet. You had the big headline out of China. Their GDP did come in below 7%, but 0.1% above the estimate of 6.8. Basically in line. We know China is slowing, but it wasn't so severe where it's creating some crazy volatility over here. The Shanghai is down small, and if you look real quickly here at the ASHR, we've talked about this little methodical move that could see some resistance around the 200-day. So, this spot that was a big-time headwind over the summer, turned into a little bit of a tailwind when, this got above this 32, and it's silently coming all the way back up to the 200-day where, it's going to see at least some resistance. So at this point, if you're trading this for the rally, et cetera, now you want to see if this 3480 area holds. Now, as far as when we look at Europe, you look at the HEDJ, which is a proxy for the DAX in Germany, it's getting real tight. Some people are looking at a potential additional trade here. That could make some sense. If this were to clear this 58, okay, it's above the 8 and 21 day, it could see a move come year end a little closer to test the 200-day, which is approximately 60. So if you did not get caught in this volatility here and you had this little double bottom, now it's getting tight again, and perhaps, if it were to break above this, that means Europe's extending the rally, and if you want to play it, this is a small way to play it. Now, as far as our markets, we've had a really big move since the double bottom, the retest of the August 24th lows. It's been, pretty decent as far as methodical with rotation and participation. You look at the chart of the SPX, you'll see that, we did have this huge double bottom, okay, that was very tradable. This is, the V that turned into a W, okay, which is definitely another type of chart pattern. Then you had your red dog reversal right here around this pivot, which happened to be 1879. Then when the jobs report came out and it was, a lot weaker than expected, they saved the market, okay, and they did another RDR above this 1900. Then we cleared this pivot, showing some power. Then another spot along this channel, which we broke above, and then retested it, and now here we are. So with that being said, there's some more room into this 2060 area. I just don't know if it's going to go there in a straight line. And if you take a quick look at the spiders, we are off of like 3-4 handles this morning. So I guess first things first, let's see if this holds. If this low from Friday holds, it's a 201.92. That'd be really impressive. If they want to shake things up a little bit more, the 8-day moving average, which has now been supporting this move, comes in a little bit closer to what is this, around 270. So support 1, support 2, coming into some bigger resistance, so you always got to be a bit more careful. Look how nice this little red dog reversal was here, and then this is when the pivot got cleared. Here is your gap that never got filled. So lots of different ways to trade and participate in this move up in the spiders versus just fighting it or complaining about it. So when a move happens, you want to rotate among sectors, and some sectors have acted better than others. The Qs, if you take a look, have been one of the strongest sectors where it's now reclaimed all its moving averages. So we want to see if this continues to provide leadership. It also never even got down there to retest the lows here, so that showed you some relative strength. All right, yeah, almost got your little double bottom there, and it took out that crazy day. So anyway, At this point, it is providing leadership. If you want to write down support, this is one support right here, 107.38. I would say it's got to stay above 106.50 in order to keep its, its leadership role. So I would watch that. The bios gave us a trade late last week. This is one of the more problem spots. If you see this sector, I just showed you the Qs. The Qs are almost all the way back near the, the highs of the range. This is not. This was one trend that broke right there with your head and shoulders top, et cetera, et cetera. Here was your ascending channel that broke, and now it's hovering down here. Okay, you did get a decent move on Thursday that gave you a little bit of a push on Friday. So, at this point, it's going to have to really hold maybe half of this bar. Otherwise, it's just back to the choppiness. So if this could stay above 307, this could be a decent focus today, maybe tomorrow for a bit of a continuation for it to play, some catch up. So we'll see if that happens. If it were to get below and close below, this 307-ish, then I think that, we're back into this end of the range and it's not as, it doesn't look as good. And I guess same thing for the Russell. The Russell really didn't, participate, actually looked a little bit better than the bios. If this wants to show some relative strength this week and play some catch up, maybe this holds above this 114.40, and if that's the case, it could clear this pivot here and then retest its higher resistance. It hasn't been back to that September pivot like the spiders and some other things have, so it's a little relative weakness, but it is tight, so it's worthy of looking at it. As far as the banks, last week we got a lot of the reports out of the way, and they were nothing to write home about. Most of them, missed on revenue, but profits were a little bit better due to less legal costs and less expenses, etc. This morning, Morgan Stanley's out. Definitely missed on a lot of metrics, and it's down, I think, almost 4 or 5%. So, for the banks, you want to see what happens to Morgan Stanley. Morgan Stanley, do they pull a Goldman where, Goldman was down $3 and went 5, or not? This is a pretty big support area. I don't know if they just reverse it today, but I do think that if you want to be a buyer into this 31 area over time, it'll be okay. This is a pretty big spot, and I think they're trying to buy the banks. Not make excuses for them, but at this point, this 31 to 32, I think is a better buy than sell, unless it really falls apart, and then that'll impact the market. Look at Goldman Sachs. Goldman Sachs. I remember sitting in here, I did the same thing. I didn't know it was going to reverse, but I was like, all right, if Goldman Sachs is going to be any good, it should hold support, and it held support, engulfed this entire range, and now it's holding above it. So almost here with Goldman Sachs also, if you miss some of this move, it's got to hold about 182 to 183, to keep this little bank move alive. This sector is not back near the highs, so that would be my thoughts there. Look where this was in the range, and that's approximately where Morgan Stanley is right now pre-market, so I wonder if they do the same thing twice or it takes a few days. JP Morgan, remember, it had that down day, and pretty much people said, okay, let's just forget about it. That was here and went right back up into the range. So, maybe into this weakness with Morgan, you could be a little bit of a buyer. JP Morgan, I think it was in Barron's mentioned positively. So, maybe around the 61.50, you could accumulate here for what could be a bigger move into this mess of resistance at some other time. So we'll see how, maybe they even just isolate Morgan in the corner for a day or two, and then everyone forgets about it, and then they buy it. So I would watch that area. As far as, high beta tech, the go-to names, it was kind of cute last week how, Netflix missed. It was down a lot after hours, but, didn't spread to your Amazon and your Google. Amazon and Google both gave you trades through pivots. You look here at Amazon, and one of the best charts out there. It cleared this really nice pivot level and gave you 2 days to the upside, and that was after holding the 21-day right here. So no real setup, but this is the highs here. Is it going to go up there and make a double top, or push through and fail? Nobody knows. All you know is that this was a nice pivot. If you took it, you got paid. You even had a little one right here. And at this point, the old highs here for Amazon, which comes out with earnings on Thursday, is 580. So about 10 points before it's got to deal with 580. So, see what happens there. We'll just keep trying to stay with that trade. Google, the same thing, very similar. Okay, above all the moving averages. Here was your last pivot when it flagged, and we talked about that a lot last week, and some guys made some good money there, and now it's just extending. So the question is, does it get back and through this before earnings on Thursday? Yes, Amazon and Google are both on Thursday after the close, or not. but right now it's trending and been a much better long than short, like some people on Twitter keep talking about. As far as two other names that look decent, that in high beta land that look set up, you look at Priceline. Definitely, you have to have a high appetite for risk if you're going to trade something like this. But if this were to get above this, this pivot here, maybe it also joins the ranks of an Amazon and Google and goes back to highs. Obviously, it was a little better to get involved in the red dog reversal here at the 200-day. Something that sometimes moves with Priceline is Expedia. Expedia, silently just trending higher. It, definitely is a little loose and wide, but this too is above all the moving averages, and seems like if the market wants another leader, this one is above the moving averages. It's nice and tight, so see what happens here with that. That's about 129. As far as some of the Chinese names, a lot of them had some decent bounces off the lows. Baba was a feisty one. Some guys caught it, and some didn't. And if you didn't, maybe there's another chance if this were to come in. This was just so you see what could ignite a move, and right there, this is an igniting bar that more than that held the top third of the range before clearing this pivot. And then some of you guys actually caught a cute short with the red dog reversal Friday. So maybe on a dip, you could be a buyer into the 8-day and then has to hold this spot in order to stay relevant. BIDU, I haven't mentioned it in a while, but it's getting tight. Nice tight lower pattern with the strength in Google and China kind of bouncing around a little bit more constructive than negative. Maybe there's a trade here. So ultimately, we like when things are tight, and right now BIDU is pretty tight. It's held higher here, so that's a nice looking pattern from a lower level. So with that being said, if it can get above this 152.50, perhaps there's more room for it to retrace higher. The stock has been very choppy this year, but sometimes it gives you trades, and here might be one of them, as there's room to the upside. As far as social, Facebook, it's been one of my favorites this year. I've been trying to buy on dips, play breakouts, et cetera, et cetera. Was in it Friday, and I sold it actually. So today maybe I'll buy back the dip. Every time you buy, you sell it, it's been hard to buy back, but it's giving you a little bit of a chance here and there. This was your last red dog reversal right there for an entry. Here's when it cleared this descending channel and showed a little bit of power. And its earnings aren't for until November. So if it wants to take out this pivot and hit north of 100 before, I guess it can. So I think it's down 30 cents. Maybe be a buyer on the dip and continue to stay with this because this has been best in breed. And then Twitter woke up. Twitter. Now I started talking about this a lot more in the morning call recently. Ever since not really this red dog reversal day here, but really this 2-day move that caught my eye. And from then, it's been acting much better. Nice little flag pattern here. The news on Friday was that Steve Ballmer, I don't know if you know who he was with Microsoft, tech behemoth, et cetera, et cetera. He confirmed a 4% stake in this, saying it's very undervalued. So with that being said, this is probably one of my biggest positions I've had in Twitter in a while. And I think I could add above this 31.50 and then sell some strength, and ultimately, even before earnings, which aren't due out for a few weeks, maybe it fills this gap up to 34. So from here to there, I think that, could be a good targeted trade. This was this year above 50. So to get back to here before it deals with all that resistance could be, decent. You have a nice double bottom, cleared it, held it. So, that would be my thought process there, and that would be nice if it stays intact. As far as oil, underperformed last week, and now we'll see whether or not, it hangs tough or not. We've shown this chart of the USO many times, and here was your igniting bar way back when. Gave you 3 moves to the upside, and then went into this little range here. Broke above this range about 2 weeks ago, came back in, and so it's still just like kind of hanging out. It's not really doing much. It's not a headwind right now. It's not a tailwind for the markets. It's just in this range. And unless it gets below 1420, that's when people will start talking loudly about it again, or gets back up to 16-ish. Otherwise, it's very small trades. But the XLE is actually doing a little bit better than, or held in there pretty well while oil moved down. You had your low, then you had your higher low, and then you had your igniting bar, and then it cleared this pivot and stayed above it. So with that being said, now with a little time, if oil bounces, maybe the XLEs give you another trade above this 69.60, and then that's a bigger spot that we probably could see at some point later into the year end. And you know, for those gold bugs out there, might as well throw it in there too. You know, down day Friday, don't know if that means it's over for gold, but I would think that you know, if it's going to be any good and want to keep some traders, you know, watching it for momentum, it would probably want to hold this spot now. You know, you go across, this was old resistance that could be new support. So anywhere if you around 111.50, you would think that maybe, you know, that's a spot to buy the dip. And then if they want to keep it alive too, but lose a little momentum, you know, could still see this 110 spot and be fine. But ultimately, you know, I would think that they would want this to hold, to keep it, you know, really moving. If it doesn't, then it just moves slower. And that's about it. It's a new week. You know, we've had a big move in the past few weeks after that poor jobs number. We haven't seen great earnings whatsoever, to be honest, but the market's not really selling off hard on it. We're coming into bigger resistance in the S&P. That 2040 to 2060 has a lot of overhead supply, so we'll see how, you know, how we head into that. We know that high beta tech acted strong. It didn't matter what Netflix did. You know, Netflix, you know, you had to see what would happen. And Netflix went in the penalty box, but it didn't put any other names in the penalty box. So with that being said, see if that continues. All right, here is support. Okay, if it were to break below this, you know, 98.40, some of you guys might continue shorting it, which is cool. You have an open gap here, so it's showing you some power to the downside, and then see how it handles this 93 to 94 area. So there's some room to the downside. And then also Apple's been out of play, but it's getting tight. So it'll be interesting to see if they want to do something with this stock before earnings. You know, earnings are not this week. It's, I think, next week. But it's you know, kind of tight in here. So I don't know if it's going to just stay tight and out of play, or maybe they want to resolve it one way or another. And they want to resolve it to the upside. You know, it's pretty much got to reclaim this 112.50 with authority, and then maybe you get to move back to the upper end of the range, or, you know, below this 109.50, then perhaps to the downside. But at this point, this range is pretty tight. So we'll see if there's any action here, because there's been a whole lot of nothing going on in this stock, you know, during October, while the market, you know, had a pretty feisty move. And we'll see what happens there as we get a little closer to the report. So with that being said, hopefully you've read my note already this morning, or actually it comes out around 8:30. You know, you want to make sure, if you're a little lost and you don't know what the virtual trading floor is, it's a product that we have where you can see what some of our content providers are doing. When we buy something or sell something real time, you get to see it. It also matches up with a lot of my strategies from my note, which also goes into, you know, some things that I talk about here, so it ties it all together. And if not, and you're traveling and you're at your job and you just want to check in and get the flavor and the feel, I'll see you back here at the recap at around 4:15. Have a great day trading.